This one has to be the best invisible indicator in trading. This is about how to know when to trade, not just where to trade. You may have had this issue yourself that you don't know when to actually trade, even after doing all the technical analysis, and things are really not quite gelling, and it's here and there, and the market's chopping, and you can't quite get it right consistently. So we'll talk about why that is in this video. So welcome. Thank you for joining me, and hopefully this will clear a few things up for you. And not hopefully, I'm pretty sure it will. Let's get going. What are we going to talk about today? Well, you may have had this happen to you. You may feel like the market is tricking you. You might ask yourself that question. Has this happened to you before? The market moves very slowly in your favor, but very quickly against you. So, for example, you may be buying, and let's say you're buying and the market is moving very slowly, and then suddenly hard against you, and then it happens again, and then hard against you, and then it continues, and you might be panicking during these times. Or let's just get rid of that. Or maybe you get stopped out only for the market to go in your expected direction. So you may be again buying, you get stopped out, and then it slowly continues in your direction. Or if you're selling, you get stopped out and then it continues in your direction. Perhaps as well, you may have another situation where you wait for ages. So for a long time, for the price to move, and then decide to close the trade, and then it actually begins to move. So for example, again, perhaps you are selling. So let's say you're selling, it's hardly moving, and you thought, oh, okay, I'll close this out, and then suddenly, bang, it begins to drop. Or in the other direction, it's very, very slow, and then bang, it suddenly pops and actually moves. So that can happen as well. And maybe you might be thinking, well, what the hell is going on? So it's like the market knows what I'm thinking and is basically against me. And you get all these kind of emotions happen, oh, what the hell? And you might be swearing and thinking this is all rigged, which is the case. The market is not in your favor. So what does that mean? Where's this going? And what is this invisible indicator? Well, drum roll, please. What is it? It is, the secret is the news calendar. And you might be thinking, oh, well, what the hell? I already know the calendar. I know about the news. But do you know how to actually use the calendar in your favor so that you improve your accuracy, know when to trade, how to do it, and how to basically merge it with your own technical analysis for your trading week? Well, I'm going to go over that in this video, and we're going to look at it. So you know the calendar, you've got Monday, Tuesday, Wednesday, Thursday, and Friday, those 5 days to play with. And you've got high impact news, you've got medium impact news, and you've got lower impact news as well. And you probably know that the high impact news are the ones to look at, and the medium impact news are not so important. Well, let's have a look at all of that. First thing to say is focus on the day of the week to time the market more accurately. And what you will notice is that the bulk of the news most of the time happens on Tuesday, Wednesday, and Thursday. That's the middle of the week, and that is when we have those interesting moves happen. What do you do? Well, you have the table, you look at the week. How does the week look like every week? And you use the high impact events only. And when you use the high impact events only, you get the time right, and then you merge the time with your technical analysis of price, because obviously you have Let's just draw it here. You have your axis, so you have your axis of price and then your axis of time. So many people focus on price, but not everybody focuses on time. And time is a crucial element. So like I said, usually happens on Wednesday, Thursday, and Friday, and the clearest moves happen at the news or just after the news release when things become a little bit clearer. What news do you look at? Well, we have the red folder news, the major news, which you're probably aware of already. But the main ones, the really, really big ones, are these, and these are also high impact. But anything which comes from central bank, which is not just the country itself, but also the wider picture. So European Central Bank as well. The Fed is obviously a big one. And we've got speeches, we've got their events, we've got rate announcements, massive one, monetary policy, which might be more generic, NFP, non-farm payroll, which is dollar-based but affects many other currencies. And we've got CPI numbers, FOMC, budgets, yearly GDP, and other things that happen every so often, like big meetings like G7. They're also of real effect. They can surprise, sometimes they create surprises. Now, we know the days that they're going to happen, and we know the hours, although they're sometimes released last minute, but at least we know the days. So we can match our plan of the week into that news announcement. So let's have a look how it looks like in practice and how to avoid trades that may not be the best trades and the best setups in terms of the probabilities. Let's have a look at an example. Here we are on the pound dollar. And let's say, as an example, on the pound dollar, you had a bias. And the bias you had was to buy pound dollar. Let's say you looked at this zone, and you were saying that now we're breaching the zone and we're looking to head to the next level. And my bias is for the week is to head higher. Now, if that's the case, what you're going to do is obviously you're going to look for a buy, some kind of buy setup, and you're going to be probably looking at the beginning of Monday and thinking, right, where can I get in order to buy the market? This is the weekly. So let's get rid of that. And now let's look at the lower time frame. So here we are. Let's say that this gray line is the beginning of the week and this gray line is the end of the week. Now, if you roll through the week and you say, right, here's Monday, what are we going to do? We're looking for buys. Okay, the market is buying. We want to get in. Let me have a look at where can I get in. I might see a level here and maybe I want to get in here. If the market comes down, it has come down, so perhaps I want to get in here and continue to buy the market. So Monday comes, you possibly have an entry. Right, great, we're moving higher. And now you're thinking, okay, great, maybe I have another chance to enter here. Again, we're going to head higher. Okay, fantastic. First one may have worked. We got the second one slowly running and now it's coming back into a range. So now you're thinking, all right, well, maybe it's range, I'll give it some time. So I continue to range and now you're thinking, well, it's now Wednesday. Oh, what's going on? It's not moving, it's not continuing, and oh, now he has broken the structure. Are we heading down? Oh dear. And now you are doubting yourself, or you may be stopped out, and oops, there we go. The market has dropped. And now the whole idea, you have doubt about the whole idea in your mind. What happens? You're now thinking, okay, we've now broken, and you may be thinking, all right, this is a downtrend. Okay, it's definitely a downtrend. We've now broken these structures on the left. We're now really heading down. So, okay, maybe this is a pullback. So now the market's going to go, it's going to pull back and it's going to come down again. So now I'm going to sell. And then as you think about selling, what happens? The market continues in the upwards direction, continues higher, moves higher. And now you're thinking, what? I'm wrong again. Should I enter? and what is going on. And by this time, you're now confused and you're not sure whether it's up or down, because we are now, looks like we are within a range. And it also looks like, well, if my sell idea is wrong, then what the heck is going on? And by this time, you're confused. And now the market comes into Friday and begins to range again and slowly moves higher, by which point you are thinking, well, I'm now lost. And it was right all along. So my initial idea, which was here, ended up being correct all along. Now, if we look at it in just black and white terms like this, we have no context, right? We have nothing to work with. However, if we look at the calendar beforehand and plan ahead, we have some context and we have a plan in place and a way that we can approach it with our bias. How do we do that? Well, first of all, we can mark out the days. So we've got Monday here, then we've got Tuesday, then we got Wednesday, Thursday, and here's Friday, and then this is the end of the week. Now that you see that, you can also look at the calendar, and you've got the news here at the bottom in this case. And first we have FOMC, so that is big news. And what happened? No reaction. And then we've got dollar news, durable goods, that's not a major one. And we've got the statement. So the statement coming out of the government there in the UK, that is big pound news. So as you can see, a big reaction on that pound news. How do we play this? Well, if you rewind back again to Monday and you've got your time set out, so it's all easy in hindsight, right? Let's set out the time now. Let's start again. So this time, what are we seeing? Can the market go higher? Yes, it can. Of course, it can do that. And in this case, it did do that. However, this is too early to tell, or too early to capture the move all the way to the upside, because the context is that we have news on the Wednesday. And in this week, it was Wednesday. We also had Tuesday, big news on the dollar. So this pound dollar, it's either pound news or dollar news. And because of that, it is too early to tell. So what would be the wiser decision? Will be simply wait until Wednesday. So whatever opportunities comes along, they may not be such high probability. However, waiting for the right time to enter as well as the right price. So you may still be looking at this level. You may also have other levels drawn. Let's say this level here. It's also one to look at. The trade may work out, but it may not work out for long. So it's wiser to wait for, number one, got FOMC. So what happened after FOMC? No reaction. And therefore, nothing big happening here. So we're going to wait until there is a clearer picture. At the moment, it's not clear enough. So we wait until Wednesday, see what happens with the news. Bang. The news creates a retracement. And since we are always bullish on this pair, on this plan for the week, then we are just looking for the next opportunity to buy. Now, do we have that here? Not really. I mean, you could enter here because we're getting a very cheap price. However, what we want to see is a resumption of the trend. So we want to see the market once again, after stopping many people out, but after this video, you will not be one of those who keeps getting stopped out. You will have a resumption. And what does a resumption look like? Well, we want to see a continuation of the trend, a retracement, and then heading higher. So something like this. We don't know how it's going to play out. We're just waiting for something like that to happen. So again, Wednesday, seems like Wednesday's passing, nothing is happening. Now we're going to Thursday. Are we going to get that? Are we going to get it? Are we going to get it? And suddenly you see the market pop to the upside. It's popped to the upside. We've got structures being broken. Went right through it. And what does that mean? Well, that means that we are now seen as we're resuming to the buy side. We now have a much, much higher probability scenario. Now we can look to the next level and we can plan a retracement and then continuation to the upside. So we can think about the next trade idea. And it'll be this. We can have a invalidation point at the last low and then head higher. So this pop is the result of this whole bit. And what was it? It was the news which created this volatility, but we're not swayed by the volatility because we know we have in mind the direction we want to go, and we're just waiting for things to play out. Now, sometimes it happens the same day. In this case, we had the opportunity the next day. Now, of course, you could buy here, but then who's to say that it won't go lower, and then you'll have to buy somewhere lower down, or you'll be really, really in trouble there, and you'll be thinking, well, I'm trying to catch a falling knife, and it becomes very more like guesswork. So since you don't know, we don't know how far it's going to drop, we don't know when it's going to turn around, and when we just wait for it to show us the clue. And since we know that we are simply coming from somewhere down here up to there, we have this range to play with, and we use that range to our benefit. So again, we're using the direction for the week, we're breaking up the week, we're looking at the major news for the week. In this case, we have 2 points to look at, two days, 2 bits of news, and either one of them will give us a hint at what is going on. Now, of course, you could say that, well, the FOMC news could have created the setup. Well, it could have done. It could have just simply popped higher. And if that was the case, well, it would be the same idea as this, the swing and then continuation higher, because the bias is still to the upside. So that's how I use the news and how you can use it as well. Occasionally we have some on Monday, occasionally we have some on Tuesday, but really the meat of it most of the time is Tuesday to Thursday New York sessions. That's when you will get the clearer picture develop. So as you can see, we've planned, we've waited, and then we are striking at the right moment. So you do have a price that you want to pay attention to. You've already marked that out at the beginning of the week. You're already thinking about it. And now you have the time. So merging those two together, you get a much clearer picture, much easier way to trade, much easier, more relaxed, and you could just simply let it unfold. So that is how we use it. And of course, that doesn't mean you don't put a stop loss. That doesn't mean you don't manage your risk. If you're wrong, the market will tell you you're wrong. And you obviously, if we just collapsed from here, then this would just be an idea that failed. So that is how we use the news. Here's that table again with the major news releases, and make a note of those. Watch out for the calendar for the red news, the big, really big red news, and then match that to your chart. Okay, thank you for watching, and remember, news is an opportunity, but only when it aligns with the higher time frame bias. The higher time frame is king, as we say on this channel, and watch out for those times. Be more careful, I would say, on Friday, if it happens on Friday, because you've got the weekend to deal with, and we can get gaps and all kinds of funny stuff going on. But otherwise, on a typical week, Tuesday, Wednesday, Thursday is your go-to. Thank you for watching, and I'll see you on the next video. Bye for now.